Hey traders and investors, today let's talk about how you can stop buying stocks at the highs. Something that probably everyone can relate to, and it doesn't just relate to stocks, it relates to other asset classes too. It seems like a lot of times when you buy a stock, you sort of top ticket, like you literally buy the last print and then it starts going lower. Well, we've all been there, and it's very, very frustrating. There's one very, very simple way to stop doing that, and it's called stop buying into vertical rallies. Stop chasing stocks higher, okay? And it's a very straightforward thing, and a lot of you guys are probably thinking, "Oh, I know that," but at the end of the day, it's one of the most simple concepts, yet one of the most difficult things not to do. People are trained to chase things higher, particularly the herd mentality that we are trained by the financial media is sort of feeding that type of behavior. So let's give you an example here in Netflix. This is an actual example, and you can see the stock rallied very, very strongly after earnings here in January, overcoming just about anything it needs to overcome. It then started, continued to rally, and there was actually a great trade we did in the Steady Trader product that members benefited very nicely. But then it started consolidating, and then really the point was once you have a few days of continuation after an up gap like this, you don't chase the stock higher. The time to buy the stock is like the next day when if it starts continuing to go higher. Okay, so let me make a plain chart with this. So the point is not to chase stocks higher. What you need to wait for is consolidation. Once you've had consolidation, which is what we're seeing right now here in Netflix, for example, then a much higher probability trade ultimately will set up if and when the stock decides to continue to the upside, or if it goes to the downside out of the consolidation period, you have a much better trade. But the point is, we need to keep our emotions in check. That's the most important thing in handling your own money. You have got to keep your emotions in check. And the way to think about it is that for any one or any five opportunities that you're missing, there are probably another, half a two, 3 dozen opportunities out there that are at least as good, if not better, that you can sink your teeth into and without having to chase something higher, right? So for every stock that's exhausted on the upside, that's had like 4 or 5 straight up days, there are some that are consolidating and have a better odds of continuing higher without turning right back around. The problem also is if you buy into a very steep stock, the probability of it making a sharp turn lower, even if it's just temporary, right, is very, very high. So let's say you got in here in the stock on the 27th of January. The probability of it actually making a move like this, like 5, 6, 7, 8, 9% lower, just to consolidate this big rally here, is actually very high. Now, obviously, in this case, it hasn't done that, but it's now going sideways, right, in consolidating in time as opposed to in price. So that's the problem when you buy into these steep charts. Remain patient. Keep control of the emotions. There are a lot of things can help with that, from yoga to other exercise to just a general. It's a lifestyle attitude, guys, and that's something we can hear a lot more of from me. I'm actually writing a book on that right now. Managing your own money is a lifestyle. It's not just a hobby. It's not even just a business. It's actually a lifestyle. So if you got any questions on that, head on over to steadytrader.com and check out how we do things. Otherwise, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.